Thank you, Paul, and to the Electric Coin Company for inviting me to open things up for you all today as we discuss the importance of on-chain privacy and the national implications of compromising transactional privacy as we enter into this next iteration of the internet powered by blockchain. My name is Lizzie Fallon. I assist Majority Whip Tom Emmer as his Financial Services Policy Director. I'd like to underscore a few points that highlight what we're working towards here in Congress. The United States leadership in the global economy is propelled by our ability to leverage innovations that make markets and communications more efficient. For example, the United States responded to the emergence of the internet, a decentralized digital infrastructure upon which anything can be built, by advancing policies that prioritize American values of privacy, individual sovereignty, and free markets. As a result, the internet stands today as an infrastructure that any American can access freely without the permission of a public official, unlocking an abundance of economic activity and opportunity. So America remains a technological leader, not because we force innovations to adopt our values under regulatory duress, but because we allow that technology that holds these values at their core to flourish. Crypto holds these values at their core. Crypto is also a technology that can shift economic power from centralized institutions back into the hands of the people. It's transformational, which is why it can be threatening to bureaucrats here in DC. And as the federal government seeks to maintain the financial control to which it's grown accustomed, the idea of a CBDC has gained traction. We all know that the very ethos of government-controlled programmable money that can be easily weaponized into a surveillance tool is everything that crypto stands against, and it's everything the United States stands against. But it's not far from home. We can just look at the Canadian trucker protest in 2022, when Trudeau weaponized the banks to freeze its own citizens' bank accounts and disrupt protests, or when OFAC sanctioned Tornado Cash, which is privacy-enabling technology, or when the federal government proposed an IRS surveillance regime on any bank account that transacts $600 or more in a given year. We must protect financial privacy, and we must protect decentralized money. This underpins the work that our office is committed to here in Congress, and it's the reason we believe the United States must embrace open, permissionless, and private innovation. Because the fact of the matter is that crypto preserves our right to social and economic freedom that we're losing in the digital era. Today, our online activity is intermediated, whether that's by big tech or like Google or Twitter, or financial institutions or the government. Everything we do on the internet, from sending an email to making a transaction to communicating on social media, is controlled by a third party. That also means these third parties are gatekeepers who can grant access or revoke access to these key factions of the internet. So as we live more and more of our lives online, as we move into this digital age, we're losing our right to social and economic privacy, our freedom that protects us from government abuses. Cryptocurrency allows us to transfer value peer-to-peer online so that we can at least have the option to engage, in peer-to-peer transactions that we don't have today. As privacy-enabling technology like privacy coins or mixers allow us to maintain on-chain privacy to use crypto like cash. So the 118th Congress will be pivotal to determining whether the United States will embrace this technology and compete on the global scale in the next iteration of the internet, or if we will squander this great opportunity for economic growth and prosperity and this opportunity to preserve our right to financial privacy. While the Financial Services Committee, under the tremendous leadership of Chairman McHenry, works diligently to educate members, hold hearings debating policy, and move legislation like the stablecoin bill or pending digital asset market structure legislation, the industry must remain focused on what happens next. Is this Congress collectively educated enough yet to take a vote on crucial legislation? We have a lot to be optimistic about here in Congress, with the majority leadership truly understanding this crypto ecosystem and why it's important to keep these opportunities onshore. But we also have a lot of education to do so we can ensure our conference and Congress generally is ready to take a vote on the bills that move out of the committee this Congress. So I'll wrap up by thanking you all for your work here in DC and across the country to ensure that the United States embraces this technology and this ecosystem and captures the amazing opportunity that's right at our fingertips. Thank you.